What are the best markets to trade? How are you executing trades? How's the narrative changing? All of these are the questions that are bouncing around on our trading floor. These were the questions that were bouncing around on the recent career course as well, relating to the Ukraine-Russia situation. And we use this as a way of sort of coaching new traders. How do you deal with a crisis in real time as it's happening? How do you think up scenarios? How do you execute trades? What market should you be watching? All of these things provide a great learning tool. What I want to show you today is how exactly you do this. What's the process to execute trades in this environment? How do you track certain markets? How do you use correlations in real time to define when to add to positions, when to exit positions, and also how to nimbly in real time stay aware of a potential denial coming and manage to execute on that as well. I'm going to show you how the elite pro traders do this, how they can maximize their trades in scenarios like this and really extract the most out of ultimately what is a very unfortunate bad situation. So I'm going to walk you through this. I'll give you a bit of background as to where we are at this point in time. This is from the 11th of February, so the beginnings of the crisis. I'll walk you through the situation that we had at that point and potential sort of scenario trades that are developing. These are the kind of ideas that get bandied around on the trading floor. And then look at the sequence of action in the execution of this as well. So that next time you get a scenario like this, next time you get a news development, you know how to trade it, how to maximize your trades, how to understand what other people are doing along the way as well. And we'll also look at the smash and grab opportunity of a denial trade at the same time. Keep watching and I'll show you how the pros do this and how they really extract some very significant amounts of money out of a market. Let's get on to it then. I'll explain a little bit of the backstory and then we'll get straight on to the execution phase, why he got in, how he got in, why he's adding to certain markets at certain times. So it's kind of a flow of information from this trader as he sees it, as it's happening. So it's a great thing to see it. So it's not just about, don't be amazed by the position or the size, the profit. More look at this from the point of view of the thought process that's going on as the trades are being taken, the why, the how. That's the bit to focus on. So, little background. It's the 11th of February. Let's go and have a little look at what happens on this. So, to give you a little bit of context, we've had a build-up on the Russian border, or on the Russian border with Ukraine, I should say. So, build-up of troops there. Now, Russia has said there's no plans, they're not going to invade. That's the line that has been toed. However, intelligence suggests otherwise, and there is an expectation or at least degree of information to suggest Russia might invade. We've also had greater sort of hostile words as well. Russia's foreign ministry suggesting that NATO and the EU has basically been disrespectful in their response, and this is ultimately increasing the odds of an invasion. Now, the way to kind of think about scenarios like this is kind of break them down. Break them down from, you have a situation, you have this military build-up. Now, this can go one of two ways. You can either have no invasion, this is a status quo. Nothing changes, but there is still that military build-up, which doesn't take away the possibility of an invasion. So that brings you then down to a situation where this can turn out well. They can move the troops back. That's your kind of end to this hostility build-up, and there's a trade in that. They could leave the troops there. That still increases the possibility of an invasion. The alternate version of this is we go down the invasion route. Now, you don't just get the invasion. What you're going to get is a situation where you get talk of it, which is still going to be very significant, or you get the first attacks, the actual invasion. So you can see by just breaking down the potential outcomes here that 3 of the 4 are varying degrees of negative risk-off type sentiment. So that's an important way to try and think about these things. What's the potential next outcome? What are the scenarios that are available? Just a bit of context here. We're going to look predominantly at, and he'll explain as we go through why certain markets are selected and how ladders are moved around. But main markets we're going to look at here: Bund, S&P and oil. Oil's your obvious one. Oil's the kind of barometer for this situation. Anything that affects Ukraine, Russia, oil's the one that moves. That's your kind of leading market. And then you have your other sort of follow-up risk on, risk off type market. So S&P, Bund, you get a risk off situation, you're looking for the S&P to drop, you're looking for Bund, bonds to rally, safety. And you're also looking for oil to rally. So expect oil and bonds to go together, the S&P equity markets to go the opposite way. So we got some reasonably clear targets on this as well. Get a move towards the upside, you've got a target in oil at 93.18. Move to the downside in S&P, target down at 44.38. Bund, bad highs up here, 166. So you got a little bit of scope as to how far they can go. You'd be looking at the S&P to put in somewhere around 30 plus handles, Bund 100 ticks, oil minimum 150 ticks just to reach those first targets. So that gives you a little bit of context. Let me talk through then the concept of how positions are built and sort of how to wind through the information. This is kind of a summary of what we're going to see in just a moment. But it's all about thinking through this in terms of getting your size on, getting your position on when you have the opportunity. If you've got this as a tweet, you're probably ahead of many people here. This is where you build positions. Remember, you've got the news early. This is a chance to load up at the best prices available, and your interpretation of the information is confirmation. Don't wait for the markets to start going and start moving, because once they do, you're joining everybody else in the traction phase, you would call it, as everyone starts picking up on the story. This accelerates the markets higher. Now, that's great if you're in, but you don't want to be trying to get in there because you're chasing. And if you're chasing, your stop's a long way down. And that's a dangerous situation. So whilst it feels uncomfortable early on, you're better off to execute as much as possible early whilst you're getting the best prices, because your risk at that point is relatively small. Once you start chasing, your risk gets big. This is a chance where you can start to add on to positions. You can start getting into the more risk-off markets as opposed to just your leading market. Exiting positions, we'll look at this as markets start to slow down, they start to steady up, they get into more sort of choppy ranges. This is the chance then to wind positions down. But what is so crucial is to stay alert to the possibilities of a change, of shift in information. And this is where you can get a denial trade. So for every trade, unless this comes from the horse's mouth, you might call it, a sort of absolute fact, an invasion, there's no doubt about that, for example, unless it's absolute fact, there's always the possibility of a denial or a kind of wind back. So you have to be ready for that. This is very much a smash and grab trade, a trade where you get in, bang, the market moves, you get out of the trade. You're not looking for a great deal more. Right, let's get the video up then, and we can see how all of this plays out. Right, this is the first bit of info. It's so important to optimize your Twitter. Anybody who starts to talk about the Ukraine-Russia situation at the beginning of February, we start watching them. News reporters, journalists, people who seem to have an association, people who can give us information. They're the people you want to be watching for. Now, the first tweet comes from Jeff Bennett. And the important thing to note here is how many followers he's got. He's got 186,000 followers. There's a lot of people that follow him. So this means that people are going to pick up on this. He's a credible source. He's going to get people acting on this news. And this comes out at 6:27. He actually references Nick Schifrin in his tweet, who then, a minute later, confirms what's been said by tweeting essentially the same thing. So this is the information that comes through. You've got this. This is before it's going to get to any of the news wires, because obviously somebody who's picked this up and tweets it then sends it to the news wires. So you're slightly ahead of most people here. So you're in a great situation. So now's the chance to act on this, to start to build up a position. So let's go and have a little look at what happens. Right, what we're seeing here then, jumps into an oil position to start with. So he's building himself into this oil position early on. Now, oil's the main focus for obvious reason. oil's the market that reacts most. Now, when it doesn't shoot straight on side, this is a little warning. It doesn't mean you're wrong. You've seen that information. Like I said, interpretation is your confirmation. So you know that you're waiting for other people to come along to start to join in. Hence why position isn't massive here. We got a position at 40 contracts. And then as that starts to get back on side, adds into the Bund. Bund is your other way of playing the risk off idea. So it's trying to build into this risk off type play. So adds into the Bund, buys another clip in Bund. Oil's now starting to tick on side. This is gaining traction. Look at the S&P, which is just here. S&P, mine's the yellow cursor to highlight this. S&P is now starting to move. This is where it starts to bring in and shifts the ladders around. This is all about bringing focus towards key markets that you want to be watching. Watching at those risk markets. Oil to lead the charge. Oil to give you that guidance. So now it's starting to add on to this. Oil's getting a bit of traction. All markets are starting to move around. The other obvious market, of course, is the Russian ruble. You're going to expect that to weaken. So now having to go at selling the Russian ruble, oil has still not really started to move just yet. So at this phase, it is still a case of building on your positions. This is the taking advantage of those tweets. You've got this before other people. You're waiting now for others to start to pick up on this. And that's going to be what instigates new positions coming in. It doesn't want to be jumping into too much here because we're not seeing the market starting to accelerate. But he's got position in oil, Russian ruble, Bund. So we're ready to try and get this move going. The S&P's dropped down around about 4 handles at this point. So you're seeing a little bit of a dip in the S&P. And still not a great deal of reaction at this point in time. But everything is starting to tick along. And this is what's giving you that confirmation. Even though you're not seeing this explosion, you're still getting this confirmation of a market that is starting to move. So now it starts to tick a little bit more into oil. This is the advantage of getting this early. Build in that position whilst you're waiting for the move to develop. So S&P is off around about 10 handles now. Oil's up about 10 ticks. And Bund's up around about 8 to 9 ticks. So now it's the time to start having a go at selling the S&P. It's moving towards lows of day as well. So it's a chance to then see it break through the low of day. And I'm quite happy to sort of add on to this. If it drifts offside, you're going to cut a little bit down. But we get into a situation where now oil starts to move. So now you're in a position where you're getting that confirmation. Ruble's starting to drop, so it adds on to the Bund. It's all about using the lead markets, oil and the ruble, to give you that little bit of clue. As oil surged up 10, 15 ticks, then it was a chance to add on to the Bund. Yes, Bund doesn't fly, but you're in a situation where you're getting that confirmation. If there's any market that's going to go on it, it should be oil. Oil's really going now. Oil's now 75 ticks up. So this is giving you that confirmation that you want. You start seeing gold jump as well, which is the ladder to the left-hand side. So gold's now running towards the upside. Oil now up around about 80 ticks. S&P is now starting to tick down. You're starting to see this risk-on traction kicking in. This is why if you get that position on early, hence why they're building a large position in Bund as well. This is why you do that early, because now if you're trying to get in, you're chasing this. Oil's on its way. Oil's up 100 ticks now, 110 ticks, 120 ticks very soon as well. So oil's flying here. And this is the bit that sort of, it's the bit that's hard to chase. S&P now starts to kick in. Everything's starting to gain traction. This is the traction phase now. This is the chance now to start adding on again. Bund's the one that's not yet going. Hence why the add again into Bund. Taking advantage of a market that's still yet to continue this move. So you get a little bit of a pullback from oil, trim a little bit of that position down. Now you're starting to get this more sort of panicky phase as this traction starts to build on. But quite comfortable. And this is the point now, that once you've got that position built up in Bund, once you've got that position built in the S&P, oil's something that now can help you with this. Can help guide whether you should be staying in this. Bearing in mind, the other two haven't moved loads here compared to what oil's done. So oil's helping you out here. And by maintaining that position in the more volatile one, but sort of managing this position, you give yourself the chance to allow the Bund to progress, to allow the S&P to progress without the need of overly cutting the size down. By dealing with oil as it moves and as it quickly sort of breaks highs, snaps back, breaks highs, snaps back. This way, then you're giving yourself a chance to let the others go. On that snap back though, starting to build a bit more position into oil. Oil's been getting a little bit clearer in the movement. We're having this push higher, and as it pulls back, it's now adding on again. But each time it adds on, it's then starting to just take a bit more off as we start to break up through highs. So P&L now up to around about 170,000. So just to give you a sense as to what we've done so far. Oil's gone miles. Oil's done around about 130 ticks. S&P around 15 handles. And Bund around about 20 ticks. So no major movement in the others. And this is where you get a kind of what you call a catch-up play, where markets then start to chase this higher. So what we've got, big move. That's giving you risk off move. But bonds and equities haven't really done a great deal at this point. So what we're expecting is the further oil goes, the more and more spillover this is going to have. The more and more people start to see the oil move. And if they're not picking up on the news at least, they're now looking at the oil move and thinking, right, this could be quite serious. And we now need to start to add on to the trade. So what you're not trying to do is cut the Bund or the S&P position significantly. Oil, we can manage. Like I was saying, you can get in a bit of oil, get out, get in a bit, get out. Oil's the volatile one, and oil's the one that's put in a decent move already. The other two haven't put the move in yet. This is the bit that you're now waiting for. So as we go on, starting to see still maintaining that S&P position. Oil continues to tick through highs, and you see just orders laid just above highs here, waiting for this move to continue up, and just using this as a chance to just exit these positions nice and steadily. S&P still up to 90, Bund positions barely being cut down. It's sort of steadily drifting out of positions. You can see where we are now. We're on this highlight. So you're just seeing oil on this quite deep pullback. The oil pullback here is around about 40 ticks. And you can see there why you sort of make sure that you deal with the oil first. The others are now playing catch up. Whilst oil pulls back, you're not seeing the S&P rallying back up. You're not seeing Bund rolling back over. No, those two are continuing along their direction. Bund is just really, not Bund, oil really is on a kind of a profit take pullback. You know, people have seen the move up, it starts to tick back, and then people chase this out. That's where you get that dip in oil. But as it does that, you don't see that in the other markets. They don't have that counter move bounce, which is what you're seeing on this highlight here. Oil pulls back, S&P stays down, Bund continues towards the upside. So everything's now starting to tick in your favor. And this is that spillover. As he talks about, you're expecting now with the size of the oil move, this spillover into other markets. And that's exactly what you're seeing here. The S&P is starting to go. Remember, 38 is your target in the S&P. Bund has still got a long, long way to go. Lots of space to go in the Bund here. So waiting now patiently to just see these markets ticking onwards. That's the goal at this point. You're trying to wait for everything to tick on. You've got those sort of core positions now in Bund, in S&P. Oil, the majority of the movement has been kind of taken out of this in terms of how far this has gone. You're starting to think, yeah, we've kind of taken what you expect to get from oil. But the others, still the S&P is only around about 15 handles down. Bund's now starting to move. So you're starting to see this ticking onwards in Bund. You're now starting to see US bonds as well, catching a bit of a bid. And he talks about these as safe haven bonds as well. People will generally go to the US more so than anything else in sort of a time of real panic. And this now starts to roll over into the US equities as well. So oil position has been cut down, but trying to sort of keep hold of some. You know, if the oil does surge on and on and on and on, you don't want to really be getting out of this. And oil does another 100 ticks from where we are. So oil's driving through the highs again, adds to the S&P once more. This is looking for the S&P to push through highs. Bund's approaching the highs of day. So again, similar strategy. adding into Bund, looking for that break of high and that acceleration up. You're taking advantage of this sort of accelerated action that we're now starting to see coming in. 5 years now pushing through highs as well. So you start to see everything's ticking along just right. It's what you want to see. You want to see the market start to push on. A very typical strategy that he does use is laying orders above the high. The reason for this is if a market's going to pop through the high, you don't know how far it's going to go. So you want to try and bank something as it pops the high. As it does that, then you sort of get flicked out on some of these orders, which is just what you get there as the 5 year jumps through the highs. So that's now saying to you, yep, brilliant. And this is where you can bank a fair bit. You get that flick and you really sort of maximize your payout there because you get this flick up, which very quickly fills you out of numerous positions. So continue in this strategy as we reach highs in the Bund. The 5 year whacks back down though. It's very, very quick move in the 5 year just there. 5 year snap back, cuts down that Bund position. You see that positions drop very, very quickly. You had nearly 300 on as it were, over 300 as it pushes through the high. As that 5 year snaps back, this is key information here for bond markets. So it cuts that down very, very quickly. Bund position gets chopped down. S&P position gets reduced. Oil position is maintained still to some degree. And what we're going to do now is we're going to skip this forward. This really is getting into the phase where it's just a kind of winding positions up at this point, particularly where you've got that sort of bump in volatility, that whip back down. You're now starting to see people are starting to question whether they should still be in these trades now. So exit most of those positions. Bund's actually pushed on higher from here, and I'll bring the charts up for you in just a moment. 35 minutes later, we now get a press conference. Now, the press conference is held by Jake Sullivan, security advisor to the White House. And what he talks about here then is that there is signs of escalation. But whilst that original story was that the US expects an invasion imminently, he winds this back, and this is the bit that I was talking about of staying aware of the situation, staying aware of what could happen. He winds the story back here by suggesting that an invasion could happen, but suggests that to their knowledge, no decision has been taken by Putin. And this is really key because what has just happened is with that tweet that comes out, it ramps up the expectation of an invasion. With this press conference, this is the chance to dial that back a little bit, to sort of pull. It's not a sense to pull the markets back, but you know what the implication is here. Anything that steps away from what is now being priced in invasion imminently, anything that steps back from that is a chance now for markets to reverse course. And you're already starting to see this. You're starting to see during the press conference, markets starting to pull back. Oil now down back below 93.18. That was the original target. S&P's bounced, but is significantly below 38. And the Bund is now all the way up. It has reached that target up over 166. So let's go on and have a little look at how these things play from here. You're starting to see already, he's got a position. He's seen the market starting to roll back down. They're starting to turn over from this point. So builds the position up. He's got a position in the S&P, short Bund, short oil. And so just to show you where we are on the chart, we're on the highlight. So we've seen the kind of spikes into highs in Bund, seen the spikes into highs in oil, and now seen the S&P starting to bounce back, stabilize as well. So I'll just pause you here. These are the comments that you get from Sullivan as he's talking. The news that comes out on the wires at 7:15 and 40 seconds. So we're at this point, there's a little clock up here. We're about 40 seconds away from this at this point. Is that the US does not believe that Putin has made a final decision on the invasion. And he's asked, this is the question on the right-hand side. PBS reported a little while ago that the United States does believe that Putin has made a decision and also communicated that decision to the Russian military. Is that accurate? And Sullivan, this is the wind back. It's not quite a denial as such, but it's a wind back of this. The report that you've referenced, which I have not seen yet, it does not accurately capture the US government's view today. So there you go. That's the wind back of that tweet. And he says, we're not saying a decision has been taken. What we are saying is that what we have sufficient level of concern about on what we are seeing on the ground and what our intelligence analysts have said. But no final decision has been taken by President Putin. That's the key bit of info here, because the market is now thinking a decision has been made and that we're now going to start to see the moves on this. So there's the information. Bearing in mind, you're still a little while away. He's still talking at this point. So you're starting to see the sense of the story coming through. So now you start to get the beginnings of the questions coming in. You can kind of see the answers coming as he starts to say them, which is why then the S&P position gets banged up, 200 plus lots. The Bund position, 200 lots. Oil position doesn't really change a great deal. He's already short oil. Oil's the one that's got less scope to go back. Bearing in mind, oil's already most of the way back. The S&P's still not even up at 38. Bund's still miles from where we left at the last point. Now you get that jump in the S&P. So it hits a little bit more to try and get the move in the S&P. Oil's now starting to come off further as well. Bund's now starting to tick down. You're getting all of the action coming through now. So what he's looking for, this is what you call a smash and grab type move. You get the quick risk on move. And once you start to get this choppy action, this is the point where you start to think, maybe people are going to be coming out of this. Bearing in mind, this is a smash and grab type trade. So now it starts winding the positions up. You're not looking at this to be any kind of major movement. This is where you've got to. You're starting to see the markets bouncing back. So this is the move that he's just taken advantage of, the smash and grab part of the move. Markets are starting to bounce back. This is the acceleration down in the Bund. 65.54 is the low of this move. This is the drop in oil. Bearing in mind, we're already on the way down. In fact, oil's the one that doesn't really come off on this. You know, markets are seeing this heightened tension as the potential of the move to continue. Oil's already in a very, very bullish situation anyway. Bund starts to come off. S&P gives you this quick flick up towards 45, and this becomes essentially the kind of the end of the trade. So it starts to wind these positions down quite quickly. S&P's now sort of chopping around. You start to see Bund, lots and lots of orders getting laid down now. This is just the chance to try and edge your way out of the trade. Not looking for too much more. Yeah, the main bit of the move's been had. It's got just over 500 grand on the trade now as well. And so this is now the point where you're thinking, right, the job's done. We've taken as much as we can get out of this trade. Wind those positions down. You see now completely out of the S&P. Out of oil, all but 20 contracts, and mostly out of Bund, all down to 25 contracts. So that's where you've managed to get to a little while later. Quickly wound all of those positions down. The job is done. And just over about 500,000 up on the trade. That's how you execute on these types of trades. Okay, so you've just seen it. That's how you execute on news. How you use lead-in markets and then add on as the story starts to gain traction. But remember this sequence. When you're executing on news, it's about getting that position on when you have the greatest opportunity. This is inherently at the beginning of the move. Yes, it's uncomfortable, but it's much better and much more comfortable than chasing as everybody else does. You will end up with much, much worse prices. You will end up with greater risk, greater whips back on you. Think about that oil pullback. At one point, it pulls back 40 ticks. If you've chased this, chances are that pullback's going to put you back to a scratch, put you offside, makes you uncomfortable. If you're in when you get that first bit of news, you're ahead of the market. You can sit through those types of pullbacks. And then as that story starts to develop out, as it gains more traction, the risk off markets start coming in. You start seeing the S&P beginning to tick along, the Bund beginning to tick up, the 5-year starting to move. All of this now is the cross market flows that you're looking for. Once you get that, now you've got the opportunity to sort of maximize this trade. And then it's all about exiting. Get yourselves out. Once it starts to stall, once it starts to slow down, you start seeing the correlations break down a little bit where you got that whip back in the bonds. It's not going to always be a whip back in the bonds, but it's about recognizing how markets are interacting with each other. Spend lots of time trying to coach traders on this, something we do in the macro part of the career course. It's all about sort of getting traders to understand these correlations, understand how to deal with these moves as they happen. And then finally, make sure you're always switched on. It's a really easy thing for traders to look at their P&L and think, brilliant, this has been a top day, and sit back. But if this is a story that has not been absolutely confirmed or denied, there's potential for an additional piece of information. So to look at the key takeaways, we've seen the action. You got that tweet, and then you got the denial part and the whip back. The denials are typically much, much smaller in size than that main move. But when you get this denial bit, that's the bit where you still get the chance for this smash and grab. I always call it sort of bonus ticks. You never know that it's going to happen necessarily, but you're aware that it potentially could happen. And so the key takeaways from this is this trader's view of it, that this is a slow burning piece of news. Because it comes out on Twitter first, and because it then gains traction, it comes from a couple of people on Twitter with, 180,000 followers, but they're not massive, massive names on Twitter. And the second person, Schifrin, has only around about 7,500 followers. So it's finding these people that may not have massive following, but will have the news. You get this slow pace move as well. As more and more people start to become aware, this is where you're waiting for it. You're waiting for this acceleration to come. When you get that, that's the bit that you're after. That's when you can get onto the trade. That's where markets become very sensitive, when markets really start to move. Make sure you know what the most sensitive market is. Of course, in this situation, oil and the Russian ruble are the ones to watch. They guide all of the action, and every other market is likely to see their action and follow this on. The other key takeaway from this is to stay aware that for every piece of news, until it is absolutely factually confirmed, there is always possibility of this being verified or denied, both of which are going to lead you to a trade. These trades over time generally diminish in value. So if you get further kind of verification, then each time this will have slightly less impact. The same with a denial. It doesn't mean there's not an opportunity, but understand the opportunity. The opportunity is inherently smaller, and so therefore it implies a smash and grab type action as opposed to a more hit and hold, slow burning type move, which is what we originally got. I know this has been a lot to take in. I hope this has been very helpful for you guys. This is the kind of level of detail that you need, the kind of level of detail that we coach all of our new traders. This is where we excel in the education side, because we have this level of detail of how and when to execute trades, even in highly volatile, news-driven markets. It's a process, it's a method to do this. This is what we try and teach all of our traders. This forms a big part of the career course. It forms a big part of ongoing mentoring and workshops for all of our traders. I'll leave you there though, guys. Hopefully you've taken something from this. Rewatch it as well. Make sure you're really picking up as much as you possibly can. I'll leave you there. Have a great rest of your day.